Hello traders out there in Traderland, my name's Dez here at Grok Trade on Thursday, December 8th, 2011. Markets take a pretty good hit here. Dow down almost 200 points, down 1.6%. The S&P down 2.11%. The Nasdaq down 2%. Russell's down a big 3.14%. Banks leading the charge to the downside. Banks took it on the chin today, down 3.42%. Gold down 2%, 3% drop on silver. Crude oil down 2.65%. The US dollar up over 0.5%, but get this, the trend TRIN closes right here at nearly 5. So look for a retracement to actually happen first thing in the morning. Now, if we look here, we have this big drop. I mean, look at this. Boom to the downside. Doesn't surprise us because we had this such a big long run up. All the oscillators are saying that we're way overbought, so a chance of a drop taking place was very, very good. However, the hopes was over in Europe there was going to be this big vote taking place tomorrow, Friday, that was supposed to be the quote-unquote bazooka to get the markets to rally northbound, but those hopes have been Reading here, some news says banks lead Wall Street down as the market doubts ECB bazooka. Bank stocks led a sell-off on Wall Street on Thursday after the European Central Bank tempered hopes that policymakers were priming a much-anticipated financial bazooka to tackle Europe's raging debt crisis. Anyway, you have oil at $150 becomes the biggest option bet out there. The prospects of oil topping 150 bones a barrel within a year or so has become the biggest bet in the options market. Interesting. And a lot of that has to do with the U.S. and Europe working to limit Iran's crude oil sales. So it'd be interesting to see how that plays out. But right now, crude oil drops quite a bit. We were at 101, where we are now below $98. And then gold just above $1,700. So that's dropping also. So commodities did take a big hit today. Looking at technical analysis here, we have this big symmetrical triangle. And then we have this bull flag, pop on the bull flag, running up, 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 up. And then because of hopes diminishing of any huge bailout taking place over in Europe, today we get a big sell-off. And it's a pretty significant sell-off. And if I go over here and show you the spiders daily, take a look at volume. Volume is about equal where it was yesterday. If I go over here to the futures, this is the S&P futures. Looking at this, we have, must be a bad read here. Oh, they switched over. Anyway, volumes not overly great on this sell-off. So what I'm looking for is I think that there's a decent chance of getting a retracement taking place, actually a bounce back up. Now the one thing that I'll be watching very closely is today's low. We have a low at 1231. The question is, will we go lower than 1231? If so, will we sustain that and close lower than that? We have the 20-day moving average, 50-day moving average, 100-day moving average, all right here that could act as support. And also this 1228 area, which we have a little support here, a little bit of resistance there. But if you come across, I went to the apex of this symmetrical triangle, came across here, and that could act as an area of support, which would be about where the 20-day moving average is. So what I'm looking at is, will we go lower than 1231, and then will we close lower than that? If not, if we stay at 1231 or higher, there's a good chance of having us come back up here into this zone, which is the higher area of this symmetrical triangle. And if that does happen, we have a much better chance of breaking out to the upside. But at this moment, bears are in control, things are dropping. So things, do have a pivot here. So things going down are in fact going down. So we have to be very careful with this. I shared with you yesterday that I was really tempted to take my hedge off and just hold on to my longs. Today I shedded some longs and made sure my hedges stayed intact. I'm very glad that I am hedged at this moment. So you want to preserve profits on this up leg. Now on the down leg, you want to make sure you're protected in that environment. Pre-market news, we saw that jobless claims dips to a 9-month low, coming in at 381,000, which is well below the 400,000 where we've been for a long time. So as far as jobless claims are concerned, those are getting better. I know there's a debate out there on saying people are just giving up completely, and those are valid arguments. However, what we're looking at here is the markets are in a symmetric triangle. We're at the resistance part of that, and we are starting to head down. So we have to be careful that we preserve profits on any longs, especially if we want to drop back down to this lower line. So especially if they do come out with news, be watching pre-market futures tomorrow before the markets open. That will tell you what's taking place and what to expect with the market open. A lot of people don't know this, but if you just go to the website, my homepage at freeonlinetradingeducation.com, my homepage, that will give you real-time data and stock quotes, and you will get futures quotes on that page. So just go to freeonlinetradingeducation.com, go to the front page before the market opens, and see what the futures are doing. That is not delayed data, that is real time, so you have that as a tool in your arsenal. Take care, safe trading to you. Spread us to a friend, and if you'd be so kind, click the like button down there below. Hope to connect with you on Facebook.